7 deadly trading sins: overtrading, copying trades, no trading plan, blaming the market, switching strategies, no risk management, and not working on the psychology side. This is Tamir from Fibonaccis-Traders.com here. Let's hit the charts. We have the SPY continuation to the downside, 5 days in a row to the downside. 5 is a Fibonacci number. We might get some bounce towards this gap here, but bears are in full control. 378 is holding, failing to hold 370 to the downside. QQQ, same here, closing this gap as we mentioned. Once it failed to break up above and closing above this trend line here, going to the downside, failing to hold this trend line here, we said that 80% of all gaps will get filled throughout time, and here we are. This gap here got filled. 266 needs to hold, otherwise back to the 258. And yes, no Santa rally this year, unfortunately. IWM, one time after another, getting rejected by this trend line, went all the way back to the 172. This 172 is the Fibonacci 618 level from swing low, swing high. Now let's see if this one will hold. Failing to do so, most probably 162, 163 to the downside will be next. Dow Jones breaking below this trend, this short-term trend line. Now 330 needs to hold. This gap here got filled. Now we have this small gap to the upside. Also here another small gap, but bearish sentiment. 5 days to the downside. 323 and 317 is in the cards. So pay attention to price action and follow the levels for support and resistance to the downside. XLE trying to hold the 83 area. As we can see, this trend line from support to resistance. Now let's see if 83 will hold, otherwise 80 and 77 to the downside. Always follow price and use trend lines and Fibonacci levels to manage the risk. By the way, if you find this video helpful or any other video on my channel, please hit the like and subscribe buttons, will be much appreciated. Also, check the link in the description below. SMH, we can see back below this trend line, and now 203 needs to hold, otherwise we do have here this gap that will get filled, 80% chance. Natural gas to the downside. Let's see if 5 will hold, otherwise let's ask Master Fibonacci. Swing low, swing high to the downside. These are the levels that we need to keep our eyes on. 560, 514, as you can see, is the next major support to the downside, because if we just look left, we can see that throughout 2021, 2022, it was a very important level of support. So by default, also now, if it will reach 514, it will be a very strong support. Otherwise, 4 will be next, in my opinion. Everything you hear in these videos are for educational purposes only. Always do your own due diligence. Never follow blindly anyone on social media, paid or free services. Always do your own due diligence. Crude oil failing to break above this short-term trend line, and now 74, and maybe even we will retest this trend line to the downside. So keep your eyes on the levels and this trend line. Bitcoin back inside the range between the 17,400 and the 16,200. This area is holding since earlier November. We can see all this area here. Let's mark it. All this area with a false break to the upside and 2 breaks to the downside. So if this area will break to the downside, 15,500 needs to hold. If it breaks to the upside, bulls needs to break up and above the 18,000. Dollar index continuing to the downside. Now 104 is holding very strong since earlier December. If we look left and we ask why the 104 is holding, because throughout 2022 it was resistance and support, and now it's also holding. Failing to hold, 102 is next. If price will break to the upside above this short-term channel, we can assume that 106, 107 is the next resistance to the upside. Apple continuing to melt down, breaking below this trend line that held short-term higher lows, since June 22, now breaking down to the downside, and we might see June's low back again at the 130, breaking down another 124 will be next. And we always need to keep an eye on Apple, because Apple is 7 or 8% of the SPY. So if Apple moves, the market moves. Nvidia, after failing to break above this area, and this area between the green and the orange trend line we talked about several videos ago, throughout November, failing to break up and above, and now back to this trend line here, short-term trend line that holds the lower highs, the higher lows. Failing to hold, we have this gap to the downside that will get filled. 80% chance, of course. Tesla holding the 150. Let's see if we can get some kind of a bounce off the 150, because 150 was a very strong resistance for price action during 2022, as we can see, since August 2020 all the way to November 2020 until it broke up. So it was a very strong resistance. Now it should hold, but should, would, could is not a strategy. All we can do is, looking left, try to identify support and resistance area for price action, following price, using levels and trend lines to manage risk. Microsoft, as we said, it broke, but we can get a false breakout, same as we had during August earlier this year, and we got this false breakout, back down and under this major trend line. Now let's see if 237 can hold. Otherwise, we have this gap here that 80% chance will get filled. Netflix, we can see trend lines are the true support and resistance for price action. Now 280 to the downside needs to hold, otherwise most probably we will revisit this lower trend line. Shopify breaking down and under the short-term uptrend channel. 35 is holding. 35 is a very important level for Shopify as support and resistance. As we can see, during 2022, support and resistance area for price action on Shopify needs to hold. Otherwise, if we look left, we have this gap here. Gaps are like magnets for price action. Turn on notification bell. I will make in the coming days a special video on gaps and what do they mean for price action. So I hope you find this video helpful. Please hit the like and subscribe buttons, and until the next video, wear mask and stay safe.